Get ready to pay more for your EMIs as the Reserve Bank of India has announced a 25 bips rate hike today, raising the key benchmark interest to 6.5%. Remember, this is the highest repo rate since August of 2018. Repo rate, for our viewers, is the rate at which the central bank lends to commercial banks, and this move will mean that EMIs and loans for consumers will shoot up. Now, RBI Governor Shakikanta thus signaled that inflation has cooled down but still remains a cause of concern. Now, inflation is expected to be at 6.5% in FY23, which will come down to 5.3% in the next fiscal year.
The Monetary Policy Committee, that is the MPC, met on 6th, 7th and 8th February. Based on an assessment of the macroeconomic situation and its outlook, the MPC decided by a majority of 4 members out of 6 to increase the policy repo rate by 25 basis points to 6.5% with immediate effect. CPI inflation is projected at 5.3% for 2023-24, with Q1 at 5%, Q2 at 5.4%, Q3 at 5.4%, and Q4 at 5.6%. The real GDP growth for 2023-24, that's for the next financial year, is projected at 6.4%, with Q1 at 7.8%, Q2 at 6.2%, Q3 at 6%, and Q4 at 5.8%.
Right. Some of the big points which RBI governor has made on inflation is FY23 CPI inflation forecast lowered to 6.5% from 6.7%, and he said inflation will remain above 4% target, with geopolitical tensions still remain the risk on inflation. And he said they are going to remain focused on withdrawal of accommodation. Global outlook not as grim as few months ago. Indian economy remains resilient, as you said, and weak external demand can be dragged on Indian growth. But some of the positive points and comments which he made was economy activity expected to hold up well, and on rural demand he said he is showing a sign of improvement. Agricultural activity remains strong, and high Rabi outlook increases prospects of rural demand. So he was very positive on rural demand and agricultural growth as well as on economy.